Hey, everybody, welcome back to Arthur Invests. We're going to look at an interesting article that just published from the Case-Shiller Index today. We're going to talk specifically about why prices are climbing so much, and then specifically what the outlook might look like for the rest of the year. So whether you're trying to buy your first home, whether you're trying to be a move-up buyer in this market, or you're probably thinking like me, hey, maybe this is a good time to get a rental property. So we'll discuss that here today. So why don't we first kick this off, and I'll do a little quick screen share. I'll find the article here. All righty, so you should see that now. Interesting here. So this article comes out of CNBC. It says here, home prices jumped nearly 20% in February, but slowing down may be coming. Case-Shiller Index says. So let's dive into this a little bit here. Some key points. Obviously, home prices increasing 19.8% in February, year-over-year increase, which is pretty amazing. The 10-city composite increases came in 18.6, up from 17.3 the previous month. So essentially what they do when they put the Case-Shiller Index together is they take a snapshot of the most the most well-known, well-established markets in the country. So it's a basket of markets ranging from across the US to just give us a snapshot of what's actually taking place. And so what this article is essentially saying, or what Case-Shiller is basically saying, is that in February, prices were up pretty much 20%. Now, before we go too much further in this, you do need to take a grain of salt here. What do I mean by that? Well, the grain of salt is because Case-Shiller Index is backward facing. So one of the things that we always talk about is that real estate is local. And so while that might be the case, it's local and it's timely. So, looking at what's happening in these markets, the part of February, that's not as helpful because now we're already in May, basically, right? And so these are lagging indicators. They're not necessarily visual projections towards future demand, right? So we're just getting a snapshot of what they are saying prices were at this moment in time, not necessarily a forecast to the future. There was a couple of interesting points made here. The microeconomic environment is evolving rapidly and may not support extraordinary home price growth for much longer, right? It's just kind of one of the people here saying that prices are going to continue to go up, but they just don't think it can go on much more. The post-COVID resumption of general economic activity has stoked inflation, and the Federal Reserve has begun to increase interest rates in response. We may soon begin to see the impact of increasing mortgage prices or rates on home prices. And so this is an interesting piece. It goes on to talk about how mortgage rates have slowly started to creep up since the beginning of this year. And there are some really good points here, and it's worth a read. I think a couple of takeaways that I take when I'm looking at this here on my own 2 cents would be that, let me stop my screen share here, is a couple of things. One, it's a snapshot in time. 2, we are getting indicators that we've already seen a lot of appreciation in the last 2 years. I mean, if you were waiting to get into the game because you thought prices were going to come down, you've probably missed out on 40 to 60% price appreciation in the last few years. Now, what's becoming evident is, of course, as the Fed has raised interest rates, mortgage rates have kind of come, they're not necessarily exactly related. One doesn't cause the other, but there is a correlation there. And so if you're trying to buy a primary residence now, the interest rates are close to 6%. If you're an investor like myself, rates are already in the 7s. So it makes it challenging. The whole goal of this, of course, is to lower demand, to kind of calm down the flame. But here's the problem and the fundamental challenge with what we're seeing in the market. People have asked me even recently, hey, what do you think? You think the market's going to tank? Are we going to see a crash again? You already know I don't think that's the case. We're not going to see a crash. One of the big factors that no one's talking about, well, there's a couple. I'll tell you my thoughts on this for a second. One, we have underbuilt over the last decade. If you look at a chart, I can show you another one here, but I won't. We've essentially stopped building houses for the last 10 years. We are way below, somewhere to the tune of 3 to 5 million, depending on what analyst you're reading. So if we're behind 3 to 5 million new home starts, that is a bit concerning. We also have millennials entering in their primary home building years where they would typically be buying first-time homes. And the price appreciation coupled with lack of inventory has made it very difficult for the entry-level buyer, if any, to come into this. And then now you have another piece that I haven't talked about yet is the interest rates, right? So I read somewhere the other day, or I heard, I don't know, but you can back it up and look online. If you were to take the last 2 years and look at the number of mortgages that were refinanced, something to the tune of 70% of all mortgages were just refinanced in the last 2 years. Now, why is that important? Well, we already talked about how we have an increase in demand, a lack of inventory, and now you have the people who would arguably have the most ability to move out of that middle and upgrade so that they can create lower level inventory for entry level buyers. Well, they're going to be stuck. People like myself, for example, right? If I want to get into that nicer neighborhood, that nicer tier property, which I definitely want to do, it is literally such a big jump now with increase in property taxes, increase of the asset price, increase of the interest rate. It makes very little sense for myself to move up, right? That is not, I'm not alone. That's not anecdotal. If you ask most people now, would they really want to sign up for a 200% increase on their cost of living just to get into a nicer neighborhood? It makes it very difficult. And plus their inventory is so low that you don't even have a guarantee that even if you could sell your house right away, which you probably will, that there'll be a house on the other end of that transaction. You'll be able to find the pick of the litter and you won't have competition. So people know that. And now that rates are going up higher, people are seeing a little appreciation. I do see that people are just kind of kicking back. So there is going to be, from what this article is saying, is there's probably going to be some sloth in demand. I agree with that. I agree with that. However, the one thing I will point out is if by that people expect there to be some sort of material price decline, I don't think that's the case. I just don't. If people don't, you have less demand, but you also have less inventory. And if people like myself are saying, hey, look, we comprise the most of the middle of America home ownership and we're not moving up, then it doesn't matter. There's less demand, but there's less inventory. So it's going to kind of balance out. How does this all summarize? And what does this all mean? Well, it essentially means we're going to have a flat market. So we might have a little bit of a haircut in some of these more these more highly migrated to areas. I think of Idaho specifically, right? You have a lot of people who moved out there from California. I think of Austin. I think of some markets potentially in Florida. Do I think there's going to be a crash? No, I don't. I do see some price reductions potentially, but I don't think there's going to be a crash. I mean, they would have to raise interest rates so much that it just scares everybody. And I just don't see that happening either. In fact, I would argue that the increase in mortgage rates that we saw in the last quarter, probably representative of all the growth that the industry is going to take this year. I think a lot of the future is actually built in to the current prices. So I think we might see mortgage rates tip up a little bit above or right on 6%. But I don't think they're going to go up much more than that. I think they've already kind of baked in the risk. It's pretty cool demand quite a bit. And I think the other thing that we'll see is probably continued exit out of the mortgage business. I mean, you're seeing, Rocket Mortgage and some of these other places that were just refinancing organizations that were just popped up to like handle all the volume that came out of COVID over the last 3 years. Well, they're having to let their staff go now because refi rates of, the demand for that product is gone. So we're in for an interesting time. So what should we be thinking about? Well, I think it's important to keep an eye on the market, where you're at, where you're thinking about investing. I don't think this is a scary time to invest in terms of prices, reducing as soon as you buy. What I do think, though, is that you got to be a little bit careful to make sure that the product you're getting into, you can hold. I'm a buy and hold investor. So look, whatever I'm buying today, I'm going to keep it 10 years. As long as the assets and the reserves are making sense, you just keep buying. You can probably eventually start to buy some stuff that might be a little below market value here as we get more inventory. So that story is yet to be written, but no, if you're waiting for a crash, I just don't think that's the case. Case-Shiller index, it kind of tells us what happened 2 months ago. Maybe that's useful to some people, but it's just telling the story that yes, we had a little bit of growth. We might have already taken all the growth of appreciation for 2022 in Q1. And so that might actually, bubble down or stay flat for the rest of the year. Next year, you could see it go down a little bit, but I just don't see a material crash coming in where people are jumping out of their houses into something else, because then there's no place for them to go, right? Even rental rates are crazy. Right now, some of the properties we have waiting lists of people who are trying to get into houses. As soon as a property shows up, our our property manager can't even put a picture or a listing on until they're ready to rent it out, because we're getting so many people offering and doing legitimately bidding wars for rental houses. So to give you an idea of the demand that's there, it's just been built up, and COVID was essentially like the pressure on a toothpaste tube, and it just squeezed it out. So anyway, hope you liked it. These are my thoughts. These are some of my hot takes here, if you will, on what's going on. Case-Shiller index. Take care, everybody. We'll talk to you soon.